as normal people on the street, etc., investing, we can't be going around buying whole Amazon shares. I mean, how long are we going to have to save to buy a $3,500 share? It's virtually impossible. So I have that portfolio that is literally my long-term portfolio. It has stocks. I will share it on the timeline. It has stocks like Richmond that I bought in 2015. It has stocks like Invicta. It has all the Stellenbosch Mafia stocks. I have ShopRite in there. I have Sassel. I have a speculative Sassel that if you've bought my ebook, you will see I bought Sassel at 25 Rand a share when the stock price went down in March of 2020. But that was obviously, it was just a speculative buy. I knew for a fact Sassel is a 300 Rand share. And when the stock price went to 25, I was like, you cannot walk away from a discount like that. It's insane. So my long-term portfolio, I approach like that. Let's talk about my speculative portfolio, or this portfolio that I'm building on the side on Easy Equities that you guys see me post about. And that is the stocks that I'm going to talk about today. It's stocks that are timely. Okay, it's stocks where I track the price. I do invest with a 3 to 5 year mindset on all of my investments. I never go in to make a quick buck. So the stocks I'm going to talk about are stocks that I think are timely, are big growers. So in my long-term portfolio, I expect to make 15 to 20% a year. That is my goal for every year. In my speculative short-term easy equities portfolio, and for me short-term is literally 3 to 5 years, which for many people is 3 to 5 days, because people think that if they buy a stock, the stock was just waiting for them and now it's going to go up. Stocks don't wait for you to get in and then it's going to go up. It doesn't work like that, okay? So you need to put in your money and you need to have a 3 to 5 year mindset at the bare minimum. So in that portfolio, I normally look for stocks that I think are undervalued and that I think has massive growth potential. So those are the stocks that you often see me tweet about. Those will be your Lemonades, your SoFis, Transaction Capital, your Sibanyas, Renogen, etc., Purple Group, etc. So I often tell people, if you look at my two portfolios, you will think this cannot be the same person investing like this. But because I have two different views to my two different portfolios, that is how I invest. And when I invest in crypto or in something like SHIB or Doge, it literally is, I'm going to get in, there's a strong community, I'm going to make my money 5x, 10x my money quickly. I take that money out like I told you guys on the TL yesterday. I took my 100K profit in SHIB and I moved it into dividend stocks. I am not crazy. I know it can probably go 10x, 100x more. But my goal was quick buck, take the money, do the responsible thing, and move it. So if you follow me, you will get the best of both worlds. Okay? So let's go into research basics. My pinned tweet, and as I said, this is not for seasoned investors. This is really for newbies. I want to, because a lot of people, do not have maybe not the funds to book one of my research classes, or they haven't booked the webinar that we had over the weekend. I understand that. So let me summarize it for you guys in 30 minutes. What research is and why I feel so passionately about research. And it's on my pinned tweet. It's one slide. Okay. It's just a summary of how I approach research. So when I look at research, I look at fundamental analysis. So often you will hear people on the timeline talk about TA. TA is technical analysis. Technical analysis is for day traders and swing traders, okay? Long-term investors only use TA for a good entry price. That's about it. They don't use it for anything else. They just like, They just look at the graphs. It's the charts and the candlesticks and all of those things that you guys see. That's technical analysis. It's not as complicated as people make it out to be. But for me, my first love has always been fundamental analysis. And what is fundamental analysis, or FA? Fundamental analysis is studying the business, okay? Studying the business. So if you look at the slide that I have, so what a lot of new traders or new investors do, I like to call us investors because investing and trading are two different things. What a lot of new entrants into the market do, what they do is they spend 100% of their time on the share price. I spend 1% of my time on the share price. I literally, if you look at the slide that I have, 1% of my time is spent on the share price when I'm doing fundamental analysis. I spend 75% of my time on the moat. Okay, I tell people a moat is, all it is a moat means what is protecting you from attackers. If you've never heard the word before, Warren Buffett made this word famous in finance, but it's actually a common English word. It was cities in historic times that was built, and around the city they used to dig these really, really, really deep trenches, fill it up with water and trees and leaves and stuff, and that is what protected the city from attackers. Buffett brought that word, historic word, into the finance world, and he said, I want to understand the moat of a company. I want to know what is going to protect my company from attackers. And who are these attackers? Attackers are the market itself, the economy. We saw COVID, it attacks everybody. It is competitors. It's anybody, new entrants, new technology, anything that can attack my company. So we need to ask ourselves certain questions when we study the moat. And if I have only 1 hour to research a company, or 30 minutes, you can be sure I will not spend less time. If I have an hour, 45 minutes of it is going to be studying the moat. What makes this company, what protects this company? Okay, that's the moat. I'm going to give you some questions that I ask myself. So when I study the moat of a company, I ask myself questions like, does the company sell a unique product or service? How easy is it to copy what this company does? If it's easy to copy what they do, it's very easy to attack them. Okay? If they don't sell a unique product or service, and a product or service, guys, doesn't have to be, if ShopRite is selling groceries and homeware, etc., you need to find, and if you don't find it, just remember that your company is vulnerable. So it's not going to be perfect. No moat is going to be impenetrable. So it doesn't mean that. You just need to understand how strong is the moat. Okay? So if ShopRite is selling food and clothes and electronics, what makes ShopRite unique? Okay, or what makes Woolworths unique? So you need to find what makes it unique at that company. And if anybody answers this question without research, I promise you they're lying. You cannot tell me, if I tell you today, go and find me the moat of Pick n Pay, and you just say, there's nothing unique about Pick n Pay. So you don't know what they're doing in Saudi. You don't know what they're doing in the rest of Africa. You don't know the artificial intelligence that they're bringing in. If you answer any of the moat questions without at least doing some type of research, you you are lying to yourself. You are shooting yourself in the foot, okay? So that is the first two questions I ask myself. I often ask myself, how loyal are the customers to the brand? So Apple, I said the other day, Apple is a cult. I might not own the phone, but I own the shares because of the brand loyalty of Apple clients, okay? Because Apple is an ecosystem. Once you have an Apple phone, you need a MacBook, you need an iPad, you need an Apple Watch, and that entire ecosystem is so protected. So Tesla, Apple clients, Woolies also has a very strong brand, and that's the type of questions I ask myself. In terms of switching cost, we want to invest in companies. When I say switching costs, I mean how hard is it for customers to leave your company, okay? So we want to find companies where it is very hard. They must make it hard for customers to leave our businesses. So if you think about Mr. Price and Ackermans, I can quickly choose. When I'm a retailer, I can be in the mall and I see this t-shirt there, I see this same t-shirt, I go to another shop. Very easy to leave a retail, to dump a retailer, customers. But it's very, very hard. It's much harder for you to leave your bank. You need to change your salary, your debit orders. So the banks are trying to work on it. We'll do everything for you, etc., etc. But essentially, it's not as easy to leave a bank, okay? It's not as easy to leave your insurance company. So we want to find companies where it's kind of hard for them to leave. So we're still talking about the moat, okay? I look also for, does the company have first mover advantage? If a company has first mover advantage, we see exponential growth at the beginning, first 10 years of the company. Again, think Amazon, think Microsoft, think the Purple Group. Because the Purple Group has democratized fractional shares, the Purple Group has taken away, if you have invested before Easy Equities, you would know that the banks charge you a monthly fee. You can't have that account, whether you have shares in it or not. You have to pay the monthly fee. I have an F&B local trader and an F&B global trader. The one was 49 Rand a month and the other one was 69 Rand a month. And guess what? 2021, all of a Sunday, they take my monthly fees away. And I'm like, okay, these guys are seeing the Purple Group is kind of coming for them and their clients, because I have stopped investing on those platforms because of the fractional shares, because I can invest, if I want to invest 1,000 Rand, I can invest 1,000. If I want to invest $50 in Amazon, I can buy $50 in Amazon. I cannot do that on my bank app because they want me to invest, to buy whole shares. So first mover advantage is a very strong. We're going to talk about SoFi later, who is the first digital banking platform in the United States. So we're going to chat about that later. What I also ask myself, and it's the question that I spend 90% of my moat on, is there massive room for growth? That question I have to answer, because why are we investing? We are investing for growth. And where is the growth going to come from? I look for new products, new services, new geographies. So I often tell people Celsius is one of my favorite companies, and Purple Group has also become, now after the results came out last week, in terms of new geographies. They were just like Eastern Europe, Asia, East Africa. I'm like, what? Okay, so massive room for growth. We have to look at new geographies, new products, new services, and then potentially, what client base is untapped. So you must spend a lot of time on asking yourself, where is the growth going to come from? I also like investing in disruptors. So if I can find a disruptive company So if I look at, so we can, for instance, look at Tesla again. I mean, Tesla is very disruptive in terms of, it's not just the electric vehicle space. I mean, it's the entire Tesla business model. I personally, just as a disclaimer, I don't own Tesla as a single stock. I own it in two of my ARC ETFs. I'm very bullish on the company. I do think that at a 350, and it's trading at about 350 times its earnings. The valuation is extremely high at the moment. But if you are looking at the long term, I think then it is something, just consider it. Just know that the company is very expensive right now, and you could potentially find other companies that are cheaper, but we need to tell an entire story around the moat. Okay? The other thing that I ask myself is, how big is the company? So if you are a small business, it's very easy to get attacked. Your attackers